Hey everyone! Today we're diving into something that a lot of people are curious about, but also a little unsure of cryptocurrency. When we think about high reward investments, it's tough to leave crypto out of the conversation. But let's be real, most of us are stuck in the space of should I get into it or is it too risky? And that hesitation, totally valid. There's a lot of noise out there. Crypto is still considered new by many. It comes with risks, and let's face it, not everyone feels confident investing in something they don't fully understand. That's exactly why we're starting with the basics. I'll walk you through the key questions you probably already have, step by step, so that by the end of this series, you'll feel more informed, more comfortable, and more in control of your decisions when it comes to crypto. My name is Savir, and you're watching Money Matters. Let's get started. So, what is cryptocurrency? In simple terms, crypto is a type of digital money. But unlike traditional money, it isn't controlled by a bank or a government. It's decentralized, which means no single person or organization is in charge of it. Instead, it runs on something called blockchain technology. The blockchain is like a super secure digital ledger. Imagine a massive notebook that records every single crypto transaction, and instead of one person holding onto it, it's shared across thousands of computers all over the world. Every time someone buys, sells, or sends crypto, that action gets recorded permanently. Because of this, it makes it very hard to cheat or hack, which is one reason why people trust it so much. Now that we know what cryptocurrency is, let's get started and talk about some of the well-known cryptocurrencies. First is Bitcoin. Bitcoin was the very first cryptocurrency, created in 2009. There will only ever be 21 million Bitcoins, which makes it limited and valuable to some people. Then there's Ethereum. Ethereum is a bit more advanced than Bitcoin because it allows people to build apps and smart contracts on its network. It's kind of like the app store of crypto, you could say. There are thousands of other cryptocurrencies out there too, called altcoins, but many of them are too risky and don't last long. Here's a chart of the top 5 cryptocurrencies, and clearly, about 70% of the market cap is dominated by Bitcoin and Ethereum. Let's take a moment to review some key statistics on how Bitcoin has performed since it was created. It all started back in 2009 when Bitcoin was just worth 0.3 cents. Yes, less than half a cent. From there, it steadily gained momentum, and by 2017, it exploded to nearly $19,000, a mind-blowing leap for early investors. But then, the wave crashed. In 2018, Bitcoin dropped to around $3,800. Imagine riding that wave and then watching it crash. Heartbreaking, right? Well, what was the reason? Until 2017, cryptocurrencies saw explosive growth, fueled largely by hype and FOMO, the fear of missing out, speculative investments, and a flood of initial coin offerings or ICOs that were mostly unregulated. However, reality hit in 2018. Regulators like the SEC started cracking down on fraudulent ICOs. Many projects turned out to be scams or failed startups. Investors panicked, leading to massive sell-offs. Media coverage shifted from hype to fear, creating a domino effect of panic selling. But check out this twist. Those who held on, they were rewarded. By 2019, Bitcoin bounced back to $12,000 and continued to climb even higher in the following years. Then came another dip in 2023, proving once again Bitcoin is a roller coaster. Bitcoin's 2023 crash wasn't caused by one thing. It was a perfect storm of global economics, regulatory pressure, and market uncertainty. But the story doesn't end there. Its rise started again in 2024. But that's a completely new and emerging story that I will cover in our next video. Alright, now let's talk about the dark side of crypto. Because let's face it, where there's money, there are scammers. And in crypto, the scams aren't just clever, they're next level. Some influencers or celebrities promote coins that end up being worthless. There are fake crypto apps, sketchy websites, and even phishing scams where someone tricks you into giving up your digital wallet info. So, before you even think about investing, you need to be extremely careful and do all of your research. Now, the big question is, should you invest in crypto? Well, based off of everything we've covered today, you're in a better position to make an informed decision. If you're completely new to it, start by watching. Read the news, follow expert opinions, and see how the market moves. And when you're ready, start small. Crypto is exciting, yes, but it's also unpredictable. Prices can swing wildly in a short time. That means you could make money, but you could also face hefty losses. Only invest money that you can afford to hold on to long term, and that you're okay to see fluctuate. The key? Be informed, be patient, and never invest just because of hype. Hey, but the good news is that you don't have to figure it all out today. Crypto isn't going anywhere. There's plenty of time to learn. For now, focus on building good financial habits. Learn the basics, ask questions, and always think long term. If you're curious about crypto, that's great. Just make sure you're being smart, safe, and informed before jumping in. Alright, that's it for today. If you found this video helpful, stick around for more videos that break down money, investing, and stuff school usually doesn't teach. And remember, financial knowledge is power, and it's never too early to start learning. Thanks for watching this video. Please make sure to like, share, and subscribe.